Anyway, let's get to the cool stuff, which is my interview with Jim Rogers, who is doing this interview from Singapore. Now, I see Jim on TV a lot these days. I'm sure you do as well. So I don't want this interview to be just like all the other interviews. So, I'm going to avoid a lot of the Fed hate stuff and all those questions and negative on America stuff. This interview is going to be different, much different than what you hear on CNBC, other radio stations, other TV stations. In other words, he's going to give you actionable ideas to invest in. Now, real brief, I did interview Jim Rogers about 12 months ago, and he was also doing from Singapore, which is very early in the morning. And he was actually running on a treadmill while he was doing the interview. He was exercising, and all of a sudden, he had this massive coughing fit. And we actually had to stop the interview for 5 minutes. And, we were really worried. I mean, even the guys who produced the show, we were kind of worried. He was coughing, and he couldn't catch his breath. And my first thought, and forgive me for saying this, was like, man, if I'm the last guy to ever talk to Jim Rogers, I'm going to be pretty famous. Plus, my podcast is probably going to get like 3 million downloads, but I'm not a selfish guy. I was very happy he was okay, and I promise you, this interview, there's not going to be any coughing fits. So here's my one-on-one with Jim Rogers. We are here with legendary investor Jim Rogers, author of A Gift to My Children, A Father's Lessons for Life and Investing. Jim, I want to thank you for coming back on the S&A Investor Podcast.
It was my delight, Frank. Thank you.
Thanks. Well, let's get right into it here. I wanted to start with the U.S. I know you focus on long-term investing, yet a lot of things have been happening short-term. Like last quarter, the S&P 500 up 12%, biggest first quarter advance in 14 years, yet earnings only expected to grow 1% for the current quarter, and economic data start to weakening a little bit, right? Pretty bad jobs report. How concerned are you on short and long term on the U.S. markets?
I'm not so concerned about short term, to quote you. Long term, I'm very worried about the U.S. U.S. is the largest debtor nation in the history of the world. One reason I'm not so worried about this year or the next few months of this year is because we have an election coming in 2012 in November, and the government is doing everything they can to win that election. They're spending money like crazy. They're printing money like crazy. So there's going to be good news. Whether the news is real or not is another question. In fact, I would suggest to you the news will not be real. They're jiggling the unemployment numbers, as you know. They're jiggling the inflation numbers, as you know. So while we have good news for the short term or medium term, longer term, it's nothing but a disaster. We have rising debts, rising everything in the U.S., which are going to cause serious problems in 2013 or 2014, or maybe even the end of this year. I'm not the only person who knows the election is going to be in November, and it'll be finished in early November, so I'm extremely worried about next year and the year after. We also have an election, and we have 40 elections this year, including France and Germany early next year. So there's some good news coming from various places, but overall the news is getting worse. The situation is getting worse.
Obama heavily favored right now, I would say. If Romney comes out the winner, any difference? Is there any way that you change your stance on the U.S., or is it more of an Obama thing, or more that we're in a lot of trouble, it doesn't matter who wins?
I can't see much difference in Romney and Obama. I don't know. In most U.S. elections, there's not a great deal of difference in the two. Certainly in this one, Obama's from Chicago and Romney's from Boston. But other than that, I don't see a whole lot of difference in the two. And neither one of them seems to understand the situation is going to do anything about it or can do anything about it.
Yeah, it's definitely a good point. Well, the last time I had you on, if you remember, I think it was around May. And you actually, I asked you, what are you doing right now with the U.S. market as a trade? And you said you were long a dollar as a trade and short technology. And I kind of disagree with the technology part. Yet, about 5 days later, happened to be exactly right. You nailed both trades. The dollar jumped higher. Tech stocks got crushed for about 3 straight months. What's your trade on the U.S. markets today? It seems like you're a little optimistic, being that it is an election year, only this year. Maybe the equities or the bond market. What are you long or short today? What are you doing with your money today?
I think it sounds like I ought to ask what you're doing and do the opposite.
Good point.
If I get it right every once in a while, so maybe I should use you. Well, what am I own commodities now. If the world economy gets better, commodities will do extremely well because there are big shortages developing. And if the world economy doesn't get better, then I want to own commodities because governments will print money. It's the wrong thing to do, but that's all they know to do. And whenever governments have printed money and debased currencies for thousands of years, you protect yourself by owning real assets. That's how you protect yourself, and you might even make a lot of money in times like that. I also I own some currencies, and I recently shorted the U.S. government, but the long-term bond market hasn't done me any good. I had terrible at timing that market. I've been wrong 2 or 3 times, but at the moment I'm short the long-term U.S. government bond.
Well, I don't know if you heard, but the U.S. said that they're done printing money for now.
Frank, you're bad for my nervous system. You get your investment advice from the U.S. government? I mean, first of all, you got to not do what they say, but look at what they do. If you look at the money supply numbers, you see they've been going through the roof. If you look at the Fed's balance sheet, a lot of new assets have gotten on that balance sheet somehow, Frank. Did the Tooth Fairy deliver them over Easter? I mean, where did all those assets come from if the government's not in the market buying? If they're not lying to us, they're certainly misleading us. They're calling it whatever they want to call it, but I'm telling you, you can look at the M2 unadjusted M2 numbers, not the ones they adjust, and you'll see that they're up a lot. And look at the balance sheet. Those assets came from somewhere.
Yeah, and based on that balance sheet, I'm reading $7 trillion has entered the market, has been printed following the 2008 recession. I don't think they're going to stop printing anytime soon. But, however, their comments did happen to impact the gold market, and gold has been coming down a little bit. You know, you've been recommending gold as long as I can remember, and I know longer than a decade, maybe 15 years, maybe even longer, but I could remember at least 12, 13 years. You would probably say you might have been early on that. I think you nailed it. It's been up for 11 straight years, and when you liked it, nobody else liked it. Today, we're in a little bit of different circumstances here where gold has come down a little bit. Not too much, but it's definitely off its highs. But yet, everybody talks about it now. You hear about it on CNBC. You hear about it. Jim Cramer talks about gold. You're hearing it everywhere. Does that discourage you, or does that make you a little worried that maybe gold has run its course?
You get your investment advice from Jim Cramer?
No, I'm just telling you that he likes gold, and because he likes gold, I'd probably take your advice on that it makes me want to short it right now.
Well, I own gold. Gold has been up 11 years in a row, Frank, which is extremely unusual for any asset, any time in history, anywhere in the world. Likewise, gold has had only correction as much as 30 or 40% in the past 12 years. That, too, is extremely unusual. Most assets fluctuate 30 or 40% every year. So the gold has been going through some unusual action for a long time. It's been correcting since September. As you know, I would expect that correction to go on for a while. First, let me quickly tell you, I'm not a good market timer. I'm the world's worst trader, short-term trader. But I would expect that correction to go on for a while. There's some things happening in India which could destroy the price of gold for a while. So, and then who knows what else may happen in the world. So I'm waiting with gold. I'm not buying gold now. If it goes down a lot, I hope I'm smart enough to buy a lot. Not a prediction. I'm just saying that I'm waiting and watching because it could well go to 11, 12, 1300. Could. I didn't say it would because it would be normal for that sort of thing to happen. If it happens, I will be buying a lot more, I hope. I'm certainly not selling my gold, nor my silver, under any circumstances.
Well, you've been around long enough to see that, markets change, and I've seen people bullish on a lot of things and bearish on a lot of things. Is there any scenario that would make you actually short gold?
Well, I guess if somebody discovered a gigantic gold mine in Chicago or Berlin or someplace, open pit gold mine, something like that. If there was suddenly a gigantic new supply of gold, if all the central banks decided to dump their gold. But other than that, I mean, even if something like some big surprise like Spain went bankrupt out of the blue, gold might go down for a while, but it would then turn around very quickly because governments would start printing more money. So other than gigantic new sources of supply, I don't think I can think of anything that would make me short gold at the moment. Gold is in a secular bull market, in my view, which has years to go. And I'm not a good trader, as I've said before. So I don't try to I don't try to trade things from the short side that are in a secular bull market. I've done that in my history, in my career, trying to to be very smart with the market. It doesn't work. My way to invest is to short things that are in secular bear markets and be long things that are in secular bull markets and not try to trade them.
Well, once again, we're talking to legendary investor Jim Rogers. His latest book is called A Gift to My Children. If you get a chance, go on Amazon. Go ahead, buy that book. It's fantastic. I wanted to turn the page away from the U.S. and talk about China. So a few people know this market better than you. I guess my question is China doing the right thing, not inflating its market, not easing right now? Because there are complaints about transparency when it comes to China. But, the regulators, it seems like they've pretty much stuck to the script over the past 6 months, over the past year, saying that their goal is to control inflation. It seems like that's what they're doing right now, but yet it's being taken as such a negative. Am I on the right track here?
Well, I don't consider that a lack of transparency. They've been announcing pretty broadly and publicly for 2 or 3 years that they're trying to cool things off, that they're trying to destroy inflation. I contrast that with the United States, where there's very little transparency, certainly from the central bank, which lies to it, and about inflation and about what they're doing. And many companies have lack of transparency. You remember Enron, Jim, I can name you a dozen, 2 dozen, 3 dozen companies where there's been very little transparency in the U.S. It's a problem in many countries in the world. Governments always lie. All governments. Chinese, to my mind, have been pretty transparent. They told us all that they have been tightening up. They've tightened up several times. They're trying to kill a real estate bubble. They're being successful at it as far as I can see. And that's going to continue, I presume, I hope. I don't know.